The Hedgeless Horseman here. It's June the 19th, 2024. First of all, thanks to the sponsors. Let's look at metals first. Actually, silver has been getting close to $30 again. I gotta admit, I don't really look that much at metals anymore, which I think is great. I kinda enjoy this summer lull we're having, trying to make the most of it. And typically the only change in value for a company is when there's news out. Price will go up and down every single day. And as I try to preach, it's like, you should have, in my opinion, a long time horizon. Big gains or potentially big gains require long holding periods, like years. So yeah, some cases will probably play out over the next 1, 2, 3 years. Doesn't really matter if they go up or down a few cents. I mean, if our upside cases play out, let's say, and we hope them to create a bunch of value, or they're just significantly undervalued as it is. I mean, let's say you have a blue sky scenario where you think the value is up 400% over the next 3 years. As if to increase the value by 400%, and then let's say sentiment gets a bit better, so you get twice as much in the market for value in a few years relative to now. That's an 8x. Or 800% actually, so I guess that's a 9x. But that's the gist of it. I mean, the hodl folios, there's not much trading there. Again, I watch if there's news out from a specific company, or if something really goes on sale that for whatever reason something is down maybe 20%. Some guy needs some money, decides to sell in the market or whatever. Yes, then it's an opportunity, because a 20% discount, assuming the case is intact and in case the actual upside scenarios play out, if you get a 20% discount today and you already thought there was potential for quite some upside potential at yesterday's price, a 20% discount can be very, very material. So that's basically it. So when we have these kind of low volatility days or low volatility markets, kind of boring markets, most of the time there's not much to do. We kind of need a big down day, some panic selling for there to be some value shuffling potential. But if most juniors go up or down 5% per day, it's like there's not too much to do. It's basically when there's high volatility, up or down, that's when opportunities are made without the help of news, without the help of value. That's just the price changing in a dramatic fashion. Otherwise, yes, it's news days, and most days the companies don't have news. That's just how it is. But gold is holding in there. Copper's actually okay. It retraced a bit, but who knows? Maybe there's some kind of short to medium term bottom here. Otherwise, I would say the cases for all metals are kind of intact. Copper is believed to be needed much more of in the future, and basically every metal has had a supply problem, a mounting supply problem. We're not investing enough, and just because you don't invest today doesn't mean that tomorrow there's going to be a shortage. But let's say you invested a lot in copper mines 30 years ago, some of them got up and running 20 years ago, might not be too far off from where some actually closed, or the mines that got put into production 80 years ago. And some of those are huge, really huge operations. So it's like, it might happen, I was going to say almost all of a sudden, where it's like, okay, all of a sudden some big mines start dying, and there's like, oh, where are we going to fill the supply gap while demand is going up? So it's a gradual process, and that's also why, not only do I stock pick and have long-term a long-term view or a longer-term strategy. The metals themselves, I think, have favorable longer-term trends going for them. So I would expect gold to be higher next year, even higher the year after that. And if you can find some companies that grow their value is higher a year from now, and a higher, more value a year from then. I mean, if you have a trend of both like higher metal prices and you're right on a few companies, that's great. I mean, that's a perfect storm. But again, most of the time it takes quite a while. I mean, even if a company's onto a big discovery, or what's eventually going to be known as a big discovery, that's going to be revealed over years. There's very few deposits where you flush out the upside case immediately. Especially if it's a vein type deposit, might go to 500,000 ounces within the first year, 1 million the next, 1.5 million, in 3 years. And if you start off with a very low valuation, let's say, and it's pricing in 200,000 ounces today, and then 1.5 years from now it's at 1.5 million ounces. Obviously, you would expect the market cap to be higher to reflect the added value. That's how simple it is, and it goes without saying then that obviously there's a bigger future value gap or future value price today gap the longer you look into the future. Because if it can grow 500,000 ounces a year, let's say a growth case, and you buy it when it's priced in, again, 200,000 ounces a year from now, that's 500,000 ounces or 300,000 ounces more than what's priced in today. A year when it's up at 1 million, that's 800,000 ounces more than today, etc. So you would expect then that your profits are going to grow with your holding period. That's it. That's what I think a lot of people simply forget. I don't think most people, and maybe including myself, at least what it used to be, doesn't really appreciate how a multi-bagger is created. I like the saying, multi-baggers are not bought, they're held. Anybody can buy a cheap stock or a growth company today. Not many can actually hold it for 3 years, for example. And that's what you need if you're going to have a multi-bagger typically. That's like 3 years holding period. Basically, you buy one day and then you don't do anything. You don't even do a single trade. This is, of course, excluding profit taking or like buying more at dips when the price to value gap might be too big again. But just a fire and forget strategy like that. Because it sounds, I'm not going to say too good to be true, but it's like the boredom factor is just immense. Imagine buying once and then not doing anything. And that actually can work better than actual active trading. That's not easy to buy into, especially when you didn't sell at a price point and it's like the next 4 weeks it has a 50% correction, and it feels all of a sudden like the world is ending, even though it might be just eating up your paper profits for a while. So yeah, you got to zoom out. It's incredibly hard to do when everybody's zoomed in, of course. Anyway, so I enjoyed this quiet summer market. Hopefully there's some news that can be put out there when nobody's watching. And what's ironic in a sense is that if you have some news out, nobody cares, nobody appreciates it, nobody sees anybody buying it, so everyone else thinks, oh, there was no value add. I mean, lazy due diligence and no, not enough, let's say, I'm not going to say greed, but like rational greed to act on it. Then people can complain, it's like, why do I own this stock? It didn't go up, yada yada. Sure, that can be, of course, frustrating, but that doesn't mean you're not going to get paid for the value that was created, the risk you took. It probably just means it's going to be further in the future. And in the meantime, if something went up in value, while price did not. So while you're frustrated about that, all of a sudden you have a case where, hey, this company is actually worth even more than yesterday. Didn't go up in price, so it's actually a better opportunity now. So because everybody was sleeping in the market, this position, which I might have, a 1% position in on my portfolio, maybe the value went up enough from one news release and the market price didn't react, so maybe it should be a 4% position all of a sudden. So it's like quadrupling in risk reward. That's absolutely not impossible in this market, I think. I mean, quadrupling is obviously very large, but it comes down to the risk reward. A news release that makes risk go down, that's enough to like, okay, warrant a higher position size maybe, because I think risk is the main characteristic that should correlate the most with position size. And that also, we're going to get to that, I think. Let's look at some news. Homerun Resources put out a news release today. I mean, they sure been able to put out a lot of news. So I mean, just here, June 5th, drill campaign. So it's not material in that sense. Before that, I mean, the big one was on May 21, so about a month ago, when they signed the LOI with CEMEX. And then signs exclusive agreement for the acquisition of silica mineral rights. So they're kind of making their, I'm not going to say monopoly, but it's like they're acquiring an empire of sorts, I was going to say, of silica sand in Brazil. I like that idea a lot. And then today we got Homerun Resources Inc. One-step laser process produces ultra pure 99.999 silica from raw sand. The company is pleased to announce that the researchers at US Davis, in collaboration with Homerun, have developed a femtosecond thermal laser processing method to purify raw silica sand to a level of 99.999 purity. That's basically the highest purity. I mean, theoretically, you could obviously go to an infinite amounts of nines. But if you look at the value pyramid that the company has in their presentation, at the very top is a silica purity of 99.999, which fetches, according to the slide, an average of, I think it's like $10,000 per ton or something. So incredibly high value stuff. I mean, further down the base, you get maybe $200, $250 per ton. So 10,000 is obviously, orders of magnitude higher. And what I think is interesting is that semiconductor chip substrate transition from conventional silicon to, I mean, I'm not going to even pretend that I understand all of this or why this or all of these technologies. The thing that stood out is, first of all, that you could get to, I mean, it needs to be, as it says here, these test results have not been independently verified and will be the subject of a Homerun patent application, which is in process. Because the first thing I thought about when I saw this, like, okay, you can have a one-step laser treatment, and that's enough to get it to 99.999, which again is like the highest purity silica that is being used. It's like you go to the top end immediately in one stage. What I also like is that where is it now? The thermal laser process used not only avoids the use of hazardous chemicals, but also eliminates the need for energy-intensive machinery typically used in the mechanical and chemical purification. So let's think about it like this. I mean, if the people that, or the companies that can get 99.999% silica, I'm assuming they right now are using energy-intensive machinery typically used in mechanical and chemical purification. Let's say that's the standard process. And they can get it without the avoids the use of hazardous chemicals in a one step. Just I'm assuming like blasting the sand with a laser that basically erases anything else except for the silica. That's obviously super green, and who knows, maybe it's really cheap as well. And you don't need all this other stuff, several stages of processing. So obviously this seems like a very big deal, and what I especially like as well is that, well, I mean, it would be obviously great if there was, the global market for the highest purity silica was like, the demand was infinite, and you could just take, hey, we're shipping 1 million, or we're getting 1 million tons of silica per year, and we just blast it with this laser, gets it to 99.999%, and then sells it for like $10,000 per ton. That it's not, as far as I understand, not a huge market, because I guess it does. I mean, not a lot of stuff requires that high purity silica. Still, my point is that it doesn't really take away. It's not going to be a choke point, like. For better or for worse, I guess. So it's like, to me, the LOI was good enough that, okay, I mean, if this works, that's probably a company maker. That the Homerun could be a multi-bagger just from the LOI with CEMEX, assuming that actually turns into a definite agreement, which I assume it will. So if that's like, okay, the first obvious company maker, and given that this is not a huge market, then you can have obviously both things. Because if I understand, this stuff sells, by the kilo, let's say. So if you sell it by the kilo, I mean, there's going to be plenty of silica to go around. If they need, 1 ton per whatever per month or something to be purified, I mean, that's nothing. That's a side project, but given how much this stuff sells for, maybe it's hugely profitable. And of course, who knows, maybe they can take some market share. I mean, if the standard processes right now by the main suppliers, if they need to sell it for 10,000, that's how it costs that much, or whatever. It's like, if Homerun could undercut the prices because they would have much higher margin using this laser treatment, and it's green as well, so it's like even more favorable from an ESG perspective, who knows, maybe they could increase their market share by simply undercutting the competitors because they have a cheaper, quicker method. I'm not saying that, again, it's like I don't know too much about this stuff, so this is just me speculating. And one of the things I thought about when I saw this is like, okay, but if this works, they can commercialize this. This is like, oh, this is the whatever silver bullet for the ultra pure 99.999% silica. I mean, then I assume everyone's gonna use it. I mean, if you find it's like, nope, we don't even need the chemical, we don't need the yada yada, we don't need the multiple steps, we don't need to treat it and ship it and treat it and go through yada yada, you can just blast it with a laser and that's like done. That everybody else would go and do that as well, but as it says here, and will be subject to a Homerun patent application which is in process. So it's like blue sky, obviously, that this is going to get verified. This turns out to be by far the cheapest, best, most efficient, most green way of producing that $10,000 per ton ultra pure silica stuff, and they get a patent on it, yada yada. That's great. And then who knows, maybe it plays a part the fact that, hey, this stuff that Homerun has starts off very cheap. I mean, maybe you could, let's say you had 95% purity in your silica sand and you used a laser. Maybe you could get it to 99.999 with a laser, but maybe it takes much more energy, or you need to do some other stuff as well. Anything really that adds to the cost. And if, again, Homerun could kind of bypass that even if other people had access to somewhat, basically the same process, but maybe it's such a benefit to just start off with that high of a purity. And I don't know what the energy cost is to run a laser and all that. So of course there's going to be stuff coming out. But the way I see it, I mean, yes, share price reacted a bit, up 9.8%. But I mean, in the grand scheme of things, how much is that? That's like it went up with what, 6 million CAD. I mean, is that like, oh, it's pricing in that they're gonna be shipping tons of this $10,000 per ton material starting next year? I mean, 6 million CAD. I don't know actually. Well, first of all, I don't know how exactly valuable this could be. I mean, again, the blue sky is that this is some sort of a holy grail thing from a bunch of perspectives. Costs, simplicity in the sense that you don't need a lot of the other stuff, and maybe it does a lot better just by the fact that Homerun has so high purity to begin with, and then they get that patented. So there's like who knows what the blue sky case is worth really, and especially in a day and age where you have Nvidia reaching 4 trillion in market cap and semiconductors, and like it says in the news release, the laser process is notable for its versatility as the production demands of new semiconductor chip substrates transition from conventional silicon to SiC and other wider band gap materials. Again, I have no idea what this means really. The foundation for these technologies on the horizon are economically produced powders of ultra pure silica convertible to silicon, silicon carbide, silicon nitride, and oxynitrides and oxycarbides. The broad range of applications of these new materials will make a dramatic impact on the business world of products based on electronic and photonic chips, battery anodes, solar cells. I mean, again, who knows? It sounds really good at least, and that's the thing. That okay, I don't need to know much, or I don't need to be an expert to appreciate that this sounds like it could be a very big deal, maybe a huge deal. What I'm interested in, especially since I'm not an expert, what's priced in? Am I paying for all this hype, if you know what I mean? Am I with the stock going up 9.8%? Am I taking huge valuation risk? Like, oh, if this doesn't work out, if none of this happens, or if everything you read here, none of that plays out, then I'm gonna be up shit creek because that's everything I paid for. No, again, I mean, I'm not sure what the exact chance of the LOI going forward is CMEX, but it's like, to me, this looks. If you do some crude calculations on this LOI, I mean, the current market cap seems to be somewhat, pretty pessimistic. It's like, the CMEX LOI is not going to turn into anything. So the way I see it, I think we're still below what I think the risk-adjusted value of this news release is, the LOI. In that case, I'm getting all of this as free upside. So I don't see it as risky. It's like I didn't take profits because it went up 9.8%. Again, I think it's still kind of working off what the value could be of the CMEX LOI. But just to get even more, I mean, it's like, oh, if the CMEX deal goes through, that could be a company maker. Oh, now we have another thing popping up, that if this works, and let's say they get a patent and all of that, so who knows what this could be worth for the company. And if I'm not paying for it right now, I mean, that's the best kind of risk to take, because at face value, you're not really taking risk, but it's diversification to the upside. It just means that the blue sky case is ballooning basically. And if you're not paying for that, I mean, I would, that's why if you buy something that looks cheap and they come out with a lot of potential, and maybe the market doesn't care too much, but it's like, hey, you know, if there's a 10% chance of this playing out, that could be a company maker as well. I mean, that's nothing to sneeze at. And maybe this, I mean, the LOI, I think, has over 50% chance of actually translating to a real deal. That's why I think probably Homerun is already cheap just based on that. And who knows what I have no idea what the potential is here really. I mean, we know what the 99.999% silica sells for. You know, what if it cost I'm just throwing out numbers here. It's like $1,000 to create this ultra high purity, and they can sell it for, you know, $10,000. That's a 90% margin. Of course, that's also going to come down to how much volumes are you selling, but it's like, I mean, you don't need too many tons, I guess, to come up with something that's material for a. Okay, loading. Still loading. I think 66 million. Okay, yeah, 66 million. Those are just my 2 cents. I'm biased here, of course. I own quite a bit of shares. I own some warrants as well. Homerun is also in the hodl folios. And like I said in the intro, I mean, this is one of those cases, I think, where it's like, hey, their idea, their business plan, what they're trying to do, let's say that's going to play out over the next 3 years. I mean, the CMEX deal probably, who knows when that can get started. And then they have a bunch of other stuff and MOUs and you know, they might do deals for like lower purity silica sand. They have the solar glass stuff with CMEX or whatever. But let's say 3 years for some of these, and there's probably going to be even more potential deals made. That's what I'm thinking, because like Brian said in his recent interview, Justin, it's like over the next 90 days you're gonna see, you know, and I don't think a lot of people expected this, for example. So this was a surprise in itself. But like, let's fast forward 3 years, jump 3 years forward in time. Either one or two or more of these things actually bore some fruit, and we had one or more of these potential company makers actually working out and making it a company maker. The downside is, of course, that nothing happens. Everything goes to shit. I know what my downside is. Okay, but if Homerun is one of those successes, and I give it 3 years, let's say, for not just one part of the story to play out, maybe 2, maybe 3, maybe 4, maybe 5, which one would think is incremental value add, right? So at the end of the day, maybe, again, let's say a few of them work out, Homerun trades for 500 million in 2 years. That's going to be paying for a lot of other ones that didn't go through. But that's the time horizon. It's like if you want some, you know, if you want to make big returns on any individual stock, you typically need the case to be able to play out. Yeah, because things take time, and the longer you give them, if they keep executing, you would expect the value of Homerun to just keep going up every, you know, month, every year, until they can't, let's say, maybe add so much value anymore. So yeah, I think it's that's why it's in the hodl folio. Pretty easy story. It's like I know what the downside risk is. That's 100%, assuming everything turns to shit, assuming they can make any money on any of their exceptionally high silica sand. Meanwhile, they're kind of putting out news that's like, okay, this is where we could get a lot of money here, for example. Oh, this is another path forward where we potentially could make a lot of money. So they just keep stacking the deck. Different, you know, verticals or whatever, different uses from the same stuff. That's very simple to extract, at least. I like that stuff. Altamira Gold confirms that the Maria Bonita discovery is a porphyry gold deposit. So they had Richard Silito down to look at the ground. Field review of the drill core from the Maria Bonita discovery by renowned expert consultant Dr. Silito. He's basically Mr. Porphyry. He has a very, you know, a star, has confirmed the porphyry origin of the mineralization. Maria Bonita is undoubtedly a porphyry gold deposit, as shown by the control of quartz veinlet intensity and gold grade, as well as the A-type character of the quartz veinlets. Dr. Sildo also notes that the porphyry system commonly occurs as clusters or alignments, so additional examples might be anticipated in the general vicinity of Maria Bonita. And then, there's some results. The company's retained expert consultants ACA Howe and Geophysics One to undertake interpretations using satellite imagery and proprietary aeromagnetic and radiometric surveys over the JUGR district to support the search for additional porphyry bodies. Mike Bennett, CEO, following the receipt of recent drill results at Maria Bonita, we have moved swiftly to further our understanding of the potential of the JUGR district by engaging highly regarded industry specialist consultants. The attribution of porphyry gold style to the mineralization at Maria Bonita is a very significant development for the company, as it is the first discovery of this type in Brazil. This realization provides a framework within which to interpret the current drill results, allow us to better vector further drilling, and also opens up new search areas for mineralized intrusive bodies in the JUGR district. Anytime you learn more about a deposit, mineralizing event, yada yada, that's obviously good. I mean, just the fact that, yes, we hear a lot that porphyries show up in clusters. Because they do. So, if you find one, it's probably not a one-off. Which of course is good. So here, for example, I think they even mention west... where's that? I think they... Most likely location would be along strike of the currently defined system to either the east or the west. That's the best guess. And here we have soil anomalies 50... ppb-AU. So this is the Maria Bonita drilling so far. And this is the outline of the soil anomaly. This is an even bigger soil anomaly. This is a smaller one. And there's transported cover and all that. So it might not necessarily mean that, the size of it is necessarily correlating to the size of the actual, deposited depth and all that. But it's a good thing. It's like then we can kind of at least assume that yes, there's bound to be, or there should be, more Maria Bonita type porphyries around here. And this, for example, obviously goes all the way to the surface. It's outcropping. Well, it's subcropping, I guess, because there's alluvial cover. But it's not where, like in Homerun Resources, where they're drilling, a kilometer underground. They can make really good deposit. If you could choose, you would obviously have a porphyry that starts right at surface, especially if it's in a jurisdiction where you can get open pits permitted. Brazil seems to be one of the best places for that because G mining has permitted and is putting a big open pit into production. Equinox has a bunch of mines in Brazil. We know that Aura Minerals, which is I think the largest shareholder of Altamira, they also have a bunch of open pit mines. So right place, I would say, to find the potential open pit deposits. So this is going to be interesting. Of course, exploration is a process. So now they have new information. Now they got to figure out, okay, this is a porphyry, and they form, differently than, let's say intrusions, for example. Okay. So we know, or typically how porphyries form. What do we expect to see? Where should there be more porphyries? So this is obviously a twist in the. This is a twist in the story in a sense, but we already know it's like that doesn't change the results, the gold grades or metallurgy or anything like that. If it's it's like what's the net change in risk-adjusted value for Altamira after this revelation? Probably a geologist. I'm Expecting Quinton's going to talk about this on Friday, which I'm looking forward to hear his interpretation. It's like, what does it mean for Altamira? Because I think, I mean, if it was an intrusion, I would assume that intrusions also can show up in clusters, like we see up in the Yukon, for example. But if porphyries does that as well, I mean, what do you rather have, an intrusion or porphyry? I'm not 100% sure. The metallurgy is at Mera Bonita seems to be really good, so, and we know probably, well, a lot of the reduced intrusion systems have very good metallurgy. Not all, I guess. I think, what's the Nova Gold? I forget the name of it. You know, the Donlin Creek. I think that's a reduced intrusion, but that seems to be refractory gold, for example. So I guess maybe not all reduced intrusions have that very favorable metallurgy like they do at Fort Knox. So yeah, I'm not sure what the net, you know, how much it changed the case. What's good though, or what is a net benefit, is that, okay, if you've confirmed now that yes, this is a porphyry, then you have a better idea where to look for more porphyries, and probably, you know, how you should explore this, for example. How to more quickly prove up Mera Bonita. So yeah, there's net benefits. The question is, how big are they? And of course, if you get the information now, which is valuable, the payoff on that information is gonna be a process as well, right? They get the consultants to, you know, with satellite imagery, like, okay, where could we find some of these? So this is obviously not where it's like you get paid up front. No, this is used in the exploration process. But I think this is, a positive news release, simply because, okay, now they know more about it. So this is a porphyry, which means there should be more porphyries around. So I guess we can at least say that, hey, there's a pretty good chance that there's other porphyries around Mera Bonita, and they could also be pretty shallow. Yeah, so I'm looking forward to what Quinton has to say. Yeah, you can read the news release yourselves. Ramp metals. I recently talked about them on K-Report. I have actually mentioned them on my channel before. That it looked interesting because they had, what's his name? I forget all the time. Yeah, Mark Bennett, who discovered the Nova Bollinger deposit. So that's why it's like, very interesting. And they were trading at, I think I looked at them when they were trading at like 18 cents. And I like, you know, Fathom Nickel, and these guys have the extension. Who knows if they have, this is Fathom Nickel's ground that goes up here. So they had the extension, and I think this is the kind of Nova Bollinger eye. So it's like, okay, this is what it looked like at Nova Bollinger in Australia. Here, I think this is the eye feature they have here. So it's like, I was interested in ramp metals because of the nickel potential and the very low market cap. I think they had a market cap of like, I don't know, 7 million, something like that. But all of a sudden, when's that? Well, I guess it's technically the 19th. So 2 days ago, they announced new high-grade discovery, 73.55 grams per ton over 7.5 meters. It is important to note that Ramp Metals has only received assay results from 153 to 171 meters and 174 to 314 for Ranger. Okay. Yeah, okay. So I'm assuming this probably is barren. It seems the gap here between 71.5 to 74.5 has not been assayed, and neither has the first 153.5 meters. Who knows what's going to show up there? Point is, I was very surprised because, I mean, we know Fathom, I mean, their very large Albert Lake property is a nickel play. Some very high-grade nickel that has been mined there. And you have these guys who stake the extension of what Fathom Nickel has, and have, you know, one of the most successful nickel explorers on board in the form of Mark Bennett, and all of a sudden they show up with a bonanza intercept of gold over 7.5 meters, which is kind of, you know, what the hell is going on here? Because yeah, tested a conductive anomaly. So this was a conductive anomaly, this was a conductive anomaly. So they put, there's obviously a high grade gold here, but I'm still not sure if that's why they drill it. I mean, kind of makes sense if you find gold at surface, there could be gold underneath, but still, I just assumed that, well, I didn't really, I don't think I was fully aware that they actually tested this target with one hole. I knew they were testing this. But still, okay. That's quite interesting. If you, the fact of the matter, or the impressive thing is that, again, if we go back to the Kennerland exploration study, basically that the earlier stage the results are, you know, the higher the impact, or the signal value is a lot higher. Because you can take some uneconomic deposits around the world. There's like, they're too small or whatever. It's like, yes, they have some high grade. I mean, if you drill in a lot of deposits that we know for sure, let's say, doesn't really make up a mine, you could probably drill perhaps something similar to this. I'm thinking, you know, the Rubicons or whatever. Maybe you could probably, you know, very nuggety, let's say somewhere in Red Lake, where there's like, yes, in a particular place you get these a small blowout in grade, and, you know, 7 point, we don't know the true width, but still, it's like, yes, it's not impossible to drill stuff like this, especially when you know, if you've drilled a lot and you know where to find it. But to have results like this when you drill blind, on the very first hole you get a assay intercept that 99.9% of juniors would kill for. It's like, either they're incredibly lucky, I guess, or this might simply be a very robust system. But that, of course, doesn't mean, I mean, it could also be like, let's say it's super rich, but it's, what do I know, very limited. Or it goes from, what is this, 600 meters. So let's say that's like 800 meters. Is this all mineralized? Do we have a, I don't know, I haven't done any numbers on it, but it's like, okay, 600 meters, if you have like bonanza grade gold, and it goes down quite a bit, you know, that could be quite impressive. So right now we have very limited information. Stock responded really well. Up 11, I think it was up to 90 cents today before selling off. Yeah, so I mean, really well received by the market. But again, it was started off at 5 million market cap or something. I mean, that's what really, you know, in my mind I was like, this is nothing to sneeze at, especially since it's the first hole. That's a big thing. Again, you can see other juniors with, like, everybody knows their project, they've drilled it a lot, and they twin a hole, for example, and they come up with a super splashy thing, and it's like, market doesn't care because everybody knows that, yeah, everybody knows there's a small high grade pod there, but nobody actually, you know, has been able to prove that there's more than a high grade pod. So that's why they don't get much attention. But here I don't think there's been any historic drilling. So this is like a brand new bonanza hit. And of course already it's up to 21 million. You can find, let's say, tier 3 deposits selling for like 21 million. I mean, it was up to maybe 26 million earlier. You have stuff out there with like proven resources that sells for 26 million or less. Probably quite, if I had to guess, quite crappy projects, and they won't become a mine. But that's the thing. So, I mean, that's the idea with, I was going to say, exploration. I mean, if you want the sure thing, you buy decent to good deposits that you still think are cheap, but it's already proven they have gold. Maybe 1, 2, 3 million ounces of gold. And you can buy that for pennies on the dollar in terms of sunk costs. And you think, hey, this is at least going to go up a lot when the gold sector gets going. Sure. And you can find, let's say really marginal gold projects or whatever with resources, and they're selling for, similar market caps. In this case, you basically have one hole, not a deposit, one hole. You have 0 ounces so far, and it's still at 21. Okay? Is it always stupid to, bet on a thing like this? No, but I mean, in this kind of sentiment environment, I've said this for the last several months, I think. I think proven success, banked success, beta, has gone up. It basically peaked when the market was at a trough or whatever you call it. Like, the around the PDAC bottom, when it seems that the junior market actually bottomed. That was the peak of the beta over alpha risk reward. Because banked success was so cheap, some of those juniors are going to go up several hundreds of percent just from waiting for the sentiment to get better. But I've also said, because I'm in pre-discovery companies as well, or early stage discoveries, like, you really want it to be something of, it's basically go for tier 1 or don't go for grassroots exploration. That's, in my opinion, what's up now. This was not a run-of-the-mill hit, of course. This was like Red Lake, Fosterville kind of newfound gold kind of hit. So now we're in this situation where it's like, as always, Schrödinger's cat. I'm assuming they are able to raise money on this news. Maybe they've already struck a deal. Maybe that's why the share price went down a bit. They already, during the market day, people were like, hey, we'll throw you money at whatever, 65 cents. I'm not saying that's the case. Maybe they're not raising money. Not impossible. My point is, I'm assuming they're going to be able to raise money off of this hole. So they will be doing more drilling. So, okay, how to play this, for example. We know, as I've said a bunch of times, the discovery hole is actually just the potential start of something. If this turns out to be a very, very valuable discovery, we're finding that out over the next 3 years incrementally, 21 million is obviously going to look very low. If this turns out to be a legit high-grade discovery, let's say a tier 2, tier 1 mine, and that's a big if, but that's also why it's still at 21 million. It's not like it's pricing in half of Fosterville. So if we were so lucky that this is the real thing, at the end of the day we're going to find that we have a high-grade gold discovery here. Let's say a few million ounces at least. That's going to be worth something, I assume. Especially in a good market, especially at these gold prices, etc., etc. So with Great Bear, for example, yes, when they made the discovery hole, it went up, 100, 150%. I don't know what the market cap was. Maybe it was at 20 million after the discovery hole. And of course, people were like, "Oh, I missed the boat. I should have been in before." It's like there's nobody on earth that could know that one hole put into that anomaly would come up with this. Absolutely no one on earth. Maybe it's a better buy today than it was before the ASA results. I'm not saying that's the case. Maybe. But it's like, I missed the boat. But it's like, did people who bought Great Bear after the discovery hole miss the boat? No, the boat just left the harbor after the discovery hole. But that's of course not saying that this is absolutely going to turn out to be a Great Bear. We don't even know if they are going to end up finding anything meaningful. Maybe this was just a super duper lucky hit. Or there's more, but it's not big enough, it's not rich enough. There's an infinite amount of possibilities where this could go. But again, if we use the time machine, let's say I put in a bet. And if I came back 3 years from now, or 1 year from now, actually, I think we're going to have a pretty big clue probably within a year or two at least. But let's say I come back in 18 months. Well, either they're going to be able to show probably that this at least has legs. It's alive, it's open, they've hit more, and the dream is alive. Maybe it's up to 50 million or 60 million. I mean, it could go way higher than that, of course. I mean, if they keep hitting some stuff like that, you have no idea how the market can take things, and this might be one of those remarkable discovery stories. We have no idea. My point is that we know what we can lose, as always. We're at 21 million right now. Theoretically, the downside is 100% from 21 million. If this does end up being a significant discovery, it could trade for hundreds of millions in 3 years from now. We know what it's trading at now, add some dilution, and it's like, okay, let's say it goes to 500 million within 3 years, or 300 million. If we assume 50% dilution, from here that's a 10 bagger in 2 years, assuming things go well. And if it's a really, really good deposit, 300 million is obviously not going to be the cap for that. Could be worth much more than that, especially in a gold bull, etc. But at the same time, sentiment, that sentiment kicker goes for every junior, so we can't use it. It's like, oh, now I love ramp because if gold goes to whatever, well, there's other stuff that will go even higher. So we have to be, we can't use a macro theme and apply it to every single case. I mean, if it's an optionality play, that makes sense because then the macro case is the case for the individual junior. But this is an alpha story. They don't have a resource. They have one bonanza hit. That's it. And believe me, nobody has any clue how this is going to turn out. Nobody in this forum, management don't know. I don't know. Nobody knows. I just know it's trading at 21 million market cap right now. And that this is a highly anomalous or incredibly anomalous assay results for the first ever hole put into a project. And again, according to, as per the Kennerland study, the better the results are, the earlier they are in the campaign, I mean, the more, the impact, the implied impact of it goes up, because you can't say that they have drilled 10,000 meters and there's nothing really outside of the that they put in like 10,000 meters here and they found one hole came back with this, but that's it. Obviously you would say, well, that's not an economic deposit because it's, this is nothing of value because it's just one hole that had those grades and those widths, and we don't even know the true widths, by the way. Still, we don't know that. This is the first ever hole. So for all we know, this is simply a very robust system, especially here, or at least here. We don't know if it peters off here, it ends here, maybe it ends here, maybe this whole stretch is mineralized, maybe they're onto something really significant. No idea, absolutely no idea. And that's kind of the beauty. So there's a few ways, I guess, to play it. I mean, obviously now there's hype. You can see in the forum there's a bunch of people, and of course moves like this attracts people, and it's like, this is the next whatever, because most people are after short term pops, let's say. I'm not, I think I made maybe one comment in this room or something. So I have a small position. There's like, it's not big enough that I worry really, and it's not really big enough that it's like, oh, even if this goes up 10x, I'm gonna be, buying a yacht or anything like that. No, it's a position right now that is like, a wait and see position, let's say. Maybe I'm gonna buy even more if they hit. Maybe the stock is up 100% and I'll be buying even more then. It all comes down to the risk reward. We know we have one highly anomalous assay results. So that stands out by definition since it's the first hole. So yeah, I mean, in a sense, one could see it's like, hey, if you like stories like this, where it's like, as far as we know, this could be anything from a nothing burger at the end of the day to a brand new, I'm not going to say world-class discovery, but of course there's a possibility for that. But let's say, you know, a highly valuable mine deposit worth, you know, several hundred million. It could, of course, again, it could be higher than that, but let's not move too far along just yet. But then I know what I'm getting in for. It's like, okay, let's say I take my position and I'm gonna do one of those fire and forget stuff. I know what my risk is. My risk is 21 million market cap and 100% downside on whatever I put into, or whatever I have in the store right now. And then one could say, okay, I'm gonna do a fire and forget. If this works out, and let's say you don't sell too much, and you start off with a relatively small position, so you can actually ride it out. I mean, if it goes to zero, you won't really care. But it's, you know, if they actually do end up making, I mean, even if you had a 1% position, if this goes up 900% over next 2 years, that's 10% to your portfolio. That's nothing to sneeze at. That's one stock adding, you know, 10%. So that's one, I think, valid way to go. I mean, make it as brain-numbingly simple as possible. Like, okay, I'm gonna just, you know, put at whatever position I can afford to lose, and then see some, you know, in a year or something, if it works well, that position might have grown by multiples. Even more 2 years from now, assuming the case is intact. Or this is not going to work out, and I'm going to lose my initial position. But if it works out, and I ride it, so I give it time to, you know, generate that 2, 3, 4, 5, 6 bagger, etc. That's obviously going to pay for whatever 10 other similar stories that got cut in half. And it's very low maintenance. I mean, of course, if it's not like, oh, I'm going to necessarily hold through anything. I mean, something could happen. They immediately show that there's no legs to this. They drill 5,000 meters around it, nothing there. Yes, obviously, in that case, you know, everybody's going to look at it as a dead project, and just to write it down to wherever, let's say it goes up to 60 million, and then they come out with dusters all over the place, it drops to 30 million, and that still looks expensive at that point, and you think the project is dead, then it makes sense to just sell and not wait, you know, 3 years, because you're gonna let the growth work out. But if there is no growth, there's no potential growth curve anyway. But I'm just saying that, like, theoretically it's still, you know, in some of these cases, because it's impossible to know, that you simply, it's like, I'm going to take a leap of faith. If it works out, it works out. Otherwise, I'm going to lose. Another one that's, you know, microcapper, sort of, Juggernaut expression. It's quite impressive. I mean, they raised $3.8 million. That's a lot for a market cap this size. And it's basically, I mean, the funny thing is, last year, I had highest hopes for Midas, I would say. Well, Midas didn't come up with that good of a results. I mean, they hit mineralization, but it was Bingo that surprised. And the funny thing is that here's Bingo. No, I think here's Bingo. Here's Shorebet. And they're seeing, you know, Shorebet type mineralization. And of course, Goliath is, you know, probably one of the most impressive discoveries in Canada in terms of gold and silver in the recent past. And they're seeing similar stuff. That is quite impressive, I would say. And I think there's a slide here. Where is that? So I mean, just give a taste, like, okay, Bingo Juggernaut exploration, 4 holes with average of 40 gram meters. They did 24 holes with average of 37 gram meters. This is a higher sample size, obviously, but they seem to have similar grades. and similar widths, stratigraphically closer to potential source. So here you have gold, copper like a dominant. At shorebed I would say it's gold, but then probably silver, then lead, zinc, and some copper. Which is, I think, why they, stratigraphically closer to potential source. So it might be, they might be on to another shorebed type slice of pie, but that's actually closer to the source, and that's maybe why copper is starting to show up. And look how, this is really early stage still. There's been, drilling. There are some samples, but it's not like they've sampled all over the place. And here you have another potential target. And I think they've tracked the strike of this, shorebed type discovery for 600 meters, I think. Not up to, Goliath yet. But still. I think they have a shot at basically finding another shorebed zone. Well, they're onto something that is looking like a shorebed type discovery. Maybe it's closer to the source, maybe that means higher copper. But they also have the Midas property, and that's not dead yet. So apparently their drills, let's see here. I think there's a slide somewhere here, I think. So this is from the, let's see, 2023 drill hole. You can see how short these are. So apparently the drills weren't strong enough to go through, zones of quartz, because quartz is so strong. It's one of the strongest minerals out there, basically. So they didn't have the juice in the actual drills to punch through it. So this is the plan for 2024. They didn't intend necessarily to do holes short as that. So the plan is now they're bringing a big or a stronger drill rig and are gonna do proper long drill holes and obviously hopefully punch through the quartz this time. So this is gonna be a proper test for Midas. So that's what's interesting with Juggernaut, that they have one shorebed type discovery that's going to see drilling this year. They also have a VMS target that wasn't properly tested, and you can see obviously they've hit mineralization. So there's something cooking here. But this, I think, at least this target is going to be properly tested this year. So do we know exactly what's going to come out of it? No, but I think like Goliath, I think they're going to keep hitting at. I think they're going to keep hitting at. I think they're going to keep hitting at Bingo, and Bingo produced some good results last year. This is a Goliath shorebed zone, so it's basically in the same rock type as well. So this, I think, is going to produce. The drill campaign at Bingo, I think, will produce good results. Midas is going to now be the more potential ace up the sleeve. So yeah, it's like, what do I expect this year from the drilling? I expect them to hit shorebed type drill results from Bingo. I expect them to do a lot more prospecting to really flush out the this ground, basically. This is like, okay, can they find where there's another maybe shear zone with shorebed potential? It's like, what's this about? Do they find more outcrops? Because again, I think this is just very, 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 very early stage. And I think with Goliath, for example, they've already started drilling. Most people know Goliath. They have a bunch of targets here. You have Treasure Island, Treasure Island Discovery 500 by 450 meters, drill ready, remains open. So I mean, Goliath is going to be drilling infill holes, I assume. They're going to be testing targets. I assume they're going to do step outs as well. So this has a shot, in my opinion, to be this is probably going to be a multi-million ounce deposit at the end of the day. Question is how large. I mean, they get a shit ton of ground to work with, and there's quite a few. There's quite a few targets to test. Let's see, where would I think? Where is actually? Well, maybe we can see it here. Bingo. I'm just trying to figure out where. So bingo, where's the? I thought one could see. 1 second. Trying to see if you can see. I think maybe here. Well, that doesn't have Goliath. I'm pretty sure there was a slide here where you could see the. Here maybe. Okay, so I guess this is Gold Digger and this is Bingo. Yeah, that's how it is. Okay, so not the same LAN package, obviously, but they have the. I think basically they share. This. They have the same drillers. I think as Goliath, and they have a lot of people they share with Goliath. So I'm pretty sure it's like. Juggernaut knows as much about the shorebet zone as Goliath, and they look to have another shorebet zone. So, I mean, obviously they probably, the junior, except for, second to Goliath, that knows how to, that knows the most about these types of systems and what to do and how they behave and yada yada yada. And I just assume it's like, let's say you get, Gold Digger, Goliath, they have a company making discovery. Let's say there's a mine there one day. If they have somewhat similar ore, let's say mineralization type yada yada at Bingo, that's obviously a natural fit. It's like even if they find a satellite deposit or whatever. So the better Goliath gets, more probable I think is that if they find something at Bingo, or they prove up something at Bingo, that's going to get monetized one day in the future. So obviously Goliath is going to be very interesting this year. I think people expected them to raise first before they started drilling, but they started drilling. So it's like, hopefully they might be able to shock the market with some more really good results, maybe a discovery or whatever. And I'm assuming that's kind of what they're aiming for, to just show that like, hey, if we can get another discovery and we can get just more and more hits, so it kind of gets more and more obvious how big the Gold Digger target is, then we can raise more money. So it's I'm not gonna say ballsy, but yeah. Western Alaska, no news really, except the fact that Western Alaska commences drilling at Illinois Creek. Here we have the actual news release. So this, I mean, to me, if you have around 100 million ounces of 1,000 grams per ton AG equivalent, and you're selling for 36 million CAD, with a district scale LAM position and CRDs, which are like famous for creeping back towards the source. Let's say, I mean, this is believed to be the very outskirts of a porphyry CRD system. So and I've said this before, it's not like the mineralization jumped to this place. No, it crept through, ate through, if I understand correctly how CRD systems work, they eat through the favorable host rock, and that's how you get these skeletal fingers basically. So this is kind of the I guess the nail of one finger. So it's like balance of probabilities would suggest that there's an extremely high chance that there's more CRD mineralization around here. This almost cannot be a one-off thing. And this is already, let's say, 100 million ounces of bonanza grade AG equivalent silver. And this is, closer to the believed source, let's say. So, where are the other fingers? Here you can see, faults and whatever. So it's not like you're immediately gonna find it, because yes, there's faults and stuff like that. So this coherent finger that, was coherent when it formed, it got faulted off, so now you have, pieces of the fingers, they're spread out a bit. But yeah, I mean, to me it just seems a bit crazy. There's like, what happens if they, find extension? What if they hit the last draw? Real targets. Target zone 1. Last draw strongly resembles Water Pump Creek with historic high-grade oxide intercept lying up deep from the target zone and similar surrounding geophysical and soil geochemical signatures. Warm Springs lies close to the past-producing Illinois gold mine, interpreted to lie near the source of the system. Warm Springs also shows historic high-grade oxide intercept up deep from the target zone and similar geophysical and soil geochemical signatures to Water Pump Creek. So that's down here. So they're going to be testing 2 systems, and this might not be enough to put a mine here at these prices. 100 million ounces AG equivalent might not be enough. I mean, it's not super remote, but it's not, in the middle of Sudbury or something like that either. But it's like, how much would it take for it, like, okay, at 200 million ounces AG equivalent at like a 1k gram per ton AG equivalent, then it's like, I would assume that's pretty much for sure would get developed at today's metal prices. 200 million? I would think so. I'm not 100% sure. Nobody exactly knows. But to me, it looks like the market is, and I'm not 100% sure why. I mean, I understand that it probably went down simply because they knew the company was going to raise. So you can't really trust the bullshit put up by the market when they know something is coming. I mean, then it's going to be a very one-sided show, because everybody that plans to be in the private placements, they have all the incentive in the world to just sell their shares in the open market to get a piece of the placement and some warrants, etc., especially if they like the project, because in that case, I mean, there's no, even if they sell at a loss, and if they believe in the project, and even if they're selling at a loss, it's no big deal to them, because if they believe in the project, they take a loss now, which they're going to be, converting into the private placement, and they get warrants plus a lower price. So it's kind of a sort of a perfect cycle, or perfect storm in that case, to actually be just shedding shares in the open market, because you're going to get in with a fat position at even lower prices with warrants, starting off from, again, quite low. Maybe, I don't remember exactly when I think they included warrants. $0.90, 36 months. 90 cents, where's that? I mean, it was at 90 cents in January, pretty much. So, I mean, imagine if you had shares here, even if you sold here, you get in at, I think the private placement was at like 65 cents, and you get a warrant that's the same price as where the stock traded, in January. And since January, nothing really has changed either. So it's the same project, you just get all of a sudden warrants as well. So that's why I think the main reason why Western Alaska got pummeled so hard. I mean, it was down to, I think it went down to like 26 million market cap. That to me looks absolutely crazy. I mean, where else do you see, like, I got 100 million ounces of 1k grams per ton AG equivalent lying around? No, I don't know many stores that have that kind of, maiden resource while having a whole, they don't even show, 1 second. Let's look at the presentation. Yeah, so here you can see, how CRD systems And this is similar scale as well. This is Tintic, 19.1 million tons, very high grade, 300 years of production, 51.6 million tons, Santa Eulalia. And this is the resource. That's like this. Or this. So it's almost like there's gotta be more stuff. There's just gotta be more stuff, because you can see how they're all connected, back to whatever source. So it's not like, I mean, if you find this a strike here because it's in the middle of the finger, and also closer towards the source. Distal, proximal, distal, proximal. This is believed to be distal. So if the source is around here, and this is where these skeletal fingers are chewing their way through, this is the source, and they just kind of, work their way up. If you're here, they didn't, again, the mineralization didn't jump to this place from the source. It chewed its way all the way back. So the question is, where are the rest of the finger, just from this finger, that connects it to the actual original source where the fluids came from? And yes, there's going to be offsets and faults. It's like, but I gotta assume that I don't think they've been transported. I mean, here you can kind of see, the misalignment. Let's say, this connected here and to there, and that's my assumption. It's not like it's 15 kilometers to the east or 5 kilometers at depth. I don't believe it's probably transported that much. So I'm simply saying that we know what they have already. I thought it was 100 million. Okay, 75 million ounces AG equivalent. So maybe they need to double that. 150 million ounces of bonanza grades. Let's say that's enough. I mean, yes, they already have. I like this. It's like 38.3 million ounces. So this is a typo, obviously. No. This is a brain fart by me. This is AG equivalent. I was thinking, gold equivalent. So this probably, would be million tons instead. But okay. So here they got over 50 million ounces AG equivalent. Open pit still. It's like, I mean, if they put up a mine here, they're probably going to mine this as well. This actually has been mined previously. At, of course, lower gold prices, given that we're at near all-time high now. But yeah, I mean, I think Western Alaska is also one of those quite simple stories. It's like, I mean, if you look at the share price, it's like, whoa. Here everything was working, here nothing was working. Well, not a lot of stuff has happened. Well, they haven't hit the extension yet. So the thing, or the negative would be that they didn't hit economic mineralization at last hurrah when they tried to find it in the first, let's say, exploratory campaign. And that's fine. That doesn't mean it's not here. That doesn't mean there's nothing here. That doesn't mean there's nothing at the Warm Springs target. Because this is the what is this? Well, I mean, 3D IP survey, CSAMT survey 2022. So I mean, there's probably stuff. Well, there's got to be stuff. There's got to be more stuff. So again, the share price is telling one story. Has it been this chaotic? Actually, no, I don't think so. I mean, yes, they didn't hit bonanza grade. They didn't find extension on the last try, let's say. But if I remember correctly, they had some problems with getting the geophysics in time and stuff like that. So it's like, hey, I think if they just find extension, if they find a similar, the rest of the finger, maybe yay long, I think they have a mine, basically. And I gotta say, I expect them to find, because our biggest weapon, I was gonna say, biggest weapon, or yeah, I mean, from a probabilistic standpoint, our biggest edge is kind of just knowing how CRD systems work. It's not a whatever porphyry. It's not necessarily a nuggety, well, it isn't a nuggety load gold system that's just, pinches and swell and then it's gone, or a low sulfidation system where it's like, here you have a, boiling zone and then that's gone and maybe faulted off and it was small to begin with. No, these can be multi-kilometer long fingers and multiple fingers. And they can be absolute, world class. Mine for 300 years. So they got a lot, and of course they have a very good team. So there's a lot to flush out here, I think. I just think I don't know what this is exactly pricing in actually. What chance of success is there priced in that they will have a mine, let alone a CRD district with grades that are, I don't know if they have the slide anymore, but meter. Okay, yeah, okay. It's not the exact slide I was looking for, but the one where it's like they showed the grade of Illinois Creek or Water Pump Creek and compared it to other. Yeah, I'm just going around in circles. Compared it to other CRD systems. Like, Water Pump Creek is very high grade. That's really good, obviously, especially since it is a bit remote. So no, I mean, these are all stories. As always, I have no idea how any of these stories are gonna look 3 years from now. My bet is I think they have a decent shot of the market being too pessimistic now, and in case some of these stores actually do work out, they find whatever they need to reach that critical threshold. Yes, I would expect, multi-bagger potential. So I don't need all of these to play out. But the ones that do play out, I also need to hold them long enough for me to not just capture 50% of gains or whatever from these levels, or 100% returns. Because if they actually do work out 100%, 50 to 100% from these levels in all of these companies, that's really nothing, because the real blue sky case is, several hundreds of millions or maybe billion plus in some cases. And furthermore, if I take that amount of risk, let's say, I need one to pay for a bunch of others. If I just take, let's say, exploration risk, and I'm gonna be running with my 30-50% return, how many other stores are that gonna pay for? I mean, that's the weird part. I mean, even an unsuccessful story can go up 50%. And yes, if you sold as 50% pop and it turned out that they didn't have any further success, yes, you look smart. But the problem is also that if you have a very cheap company and it does work out and you sell after a 50% return, for example, you sell out your whole position, you might have missed the majority of what that stock was going to return. So it's a, you live and die by the sword. Anyway, thanks for listening. Wow, this turned into a very long video. Anyway, consider me biased. I own shares of all companies mentioned. A lot of them are banner sponsors as well, so consider me twice biased. This is not investing advice. I have no idea which of these stocks I might lose money on or which I might make money on. And do your own due diligence. Never invest money you cannot afford to lose. These are all, I would say, relatively high risk, high reward stories. Some more riskier than others. That's it. Thanks for listening. Bye.